Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news the international stresses are taking a toll on factory expansions worldwide. Firstly, in the US, car sales rose only marginally in October, held back by rising interest rates and inflated vehicle prices. Ford said it sees slipping consumer confidence behind its lower sales volumes, indicating sales will continue to wind back in 2018. That is consistent with two factory PMI reports out overnight. The ISM-1 described demand as moderately strong, a downgrade from robust in the previous months. It also said consumption had softened, with production and employment continuing to expand, but at lower levels compared to September. The market one, which scores lower, was virtually unchanged. In Canada, their PMIs slipped to a 22-month low. In Mexico, their factory expansion weakened in October as well. In China, factory growth stalled in this private sector PMI report, much like the official one. And staying in China, their currency has hit a 10-year low of 6.967 to the US dollar, and authorities are worried. Their central bank has stepped up measures to defend the currency to try and prevent it going over 7. If that psychological barrier is breached, many worry that the decline will become a stampede. Chinese companies who have borrowed in foreign currency are particularly vulnerable, even if they're in the business of exporting. In the US, their president may fire cheap and insulting attacks at their central bank, but in India it is actually worse, with the central bank isolated and defending its independence. The central bank wants to rein in the cowboys in their non-bank financial sector because of the risk to India's financial stability. But industry and the government are determined to ensure these dodgy financial channels remain open and protected from tighter scrutiny. In Australia, their factory PMI climbed to a 4-month high, showing reasonable expansion at a faster rate of growth in October. That is consistent with rising growth and booming exports. But that boost isn't being reflected in their housing market, especially in their big cities. Sydney property prices have fallen 7.4% over the past year, the largest annual decline since 1990, as credit curbs intended to slow investor buying has also hurt other buyers. In Melbourne, prices are down almost 5%. Analysts are expecting this downturn to be a long one. The US Treasury 10-year yield is little changed at 3.14%, but their 2-10 curve is up to just under 29 basis points. The Aussie government 10-year is at 2.65%, that's up 2 basis points. The Chinese government 10-year is at 3.52 and down 1 basis point, while the New Zealand government 10-year is up 3 basis points to 2.60%. Gold has jumped to $1,236 an ounce, a gain of $22 an ounce. Oil prices are sharply lower today, down more than $2.50 a barrel and now just over $63.50 a barrel. The Brent benchmark price is just under $73 a barrel. Rising supply and falling economic growth are factors pushing the prices lower. And the Kiwi dollar is starting today a little firmer at 65.5 US cents. On the cross rates, we're at 92.4 Aussie cents and much stronger at 58.3 euro cents. That puts the TWI back to 70.4 and its highest in more than 2 months. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.